I believe some of the Democrats on the committee are going to treat the Plotkins, the Ken Griffins, the hedge fund piece of this as villains. Yeah, no, I do believe that the Reddit folks will be, I don't know if it's much heroes. I think probably more curiosities. To me, the only real thing they're going to maybe determine here in terms of something we haven't been able to learn yet, maybe are more details about the relationship between Citadel and Robinhood. Other than that, I think this is going to be a lot of noise, but not a lot of consequence coming out of it. Maybe some SEC regulations down the road, but that won't be coming from this committee.
But you heard in the aftermath of Thursday, January 28th, which was when GameStop peaked intraday at close to $500, and also Robinhood put in some curbs on trading. We now know that's because they needed to put up some cash for a margin requirement that slowed things down for them. But in the aftermath of that, you had the likes of AOC on the one hand and Ted Cruz on the other saying that it was an outrageous situation that sort of needed more regulation. And yet, from everyone I've talked to in the short community, in the legal community, it sounds like the appetite for further curbs is low. The short selling curtailment that occurred during the financial crisis on financial names in an effort to sort of boost banks and brokerages was regarded as ineffective in studies afterwards. And that just doesn't seem like the solution. The other thing that a professional investor versus a less sophisticated investor might notice here is that this sense that the smaller investors who were bidding up GameStop were wronged. Yes and no. I mean, you could argue that we should have free, unfettered markets, and that's one valid argument. But on the other hand, there's a reason why retail investors so often get hurt in these situations, because they may not have the track record, the knowledge to understand how to get out without taking major losses.
I think right now the question is Robinhood. I've been very proud to see a company like Robinhood emerge. This gives new investors an opportunity to invest. It levels the playing field for the small investor. But I was very disappointed to see when they halted trading. And I think that needs to be explained in this hearing. I'm generally against more regulations. Every time Congress tries to regulate Wall Street, unintended consequences happen. The Dodd-Frank comes to mind. I think that hurt Main Street. I think that hurt a lot of small businesses and a lot of homeowners. So I don't want to see Congress overreact, but I think Robinhood owes an explanation as to why they halted trading.
Well, I think we don't know yet. I mean, what's interesting, obviously, Robinhood and other kinds of apps that have given small investors, a window into the market have really democratized the market. But at the same time, we need to make sure that there are rules in place that enable Robinhood to function so that it doesn't, destroy the market, and so that it protects small investors. What I'm more interested in is the opening that this may be to looking again at the operation of hedge funds, and they still remain largely unregulated in the market. They are engaged in behaviors that supposedly a set of rules is going to prevent small investors from engaging in. And so I want the same rules to apply whether you're a small investor or you're a professional investor. And we need to make sure that that doesn't cause the kind of volatility in the market that happened in January.